Let me start that one again. If you're looking for professional quality day trading education, as well as high level trade analysis and dissection, you've come to the right place. My name's Pat Mitchell. I've been a professional day trader for the past 11 years, and it has been a long day. So bear with me. And today we are going to be going over one single trade that I took, and we're going to also be discussing how to navigate markets, especially on big sell-offs. We are approaching the bear market territory from all-time highs down to lows. We're at about 17.5%. So we are nearing that 20% mark. So we are starting to get really interesting. So give me a second. I'm going to fire up the charts. And then we are going to, it doesn't want to let me click on it. There we go. Okay. So now that we're into the charts, let's have a discussion. So it's really important as traders that we distinguish and differentiate between good days and bad days in the market. Okay. And that's the easiest way of putting it. And what a good day is when risk aligns, we don't have major catalyst, we don't have super wide range where it becomes very difficult to control or manage your risk. And a bad day is the opposite of that. When we have difficulty executing a trade, you can execute it, the level's there, but what do you risk off of? Your risk is so wide off of the next technical level down, or it's just where you would, I have another risk strategy that I call standard risk, but right below that is a technical level, but then it just extends that risk. It becomes very difficult to navigate. So what do? Also, not to mention, if you do trade options, the premium today was insane. It was 3x on a high day. So when I executed these trades, that premium was in the $6 range, $6 per contract, which is $600 per contract. You also have to size down. There's a lot that you have to consider on days like this, and a lot of people don't, and then they wonder why they had such a huge loss on days like today. So let's discuss this trade, and then at the end of that, I still have more I want to talk about on exactly how to navigate markets like this. So let's get into it. So the trades that we were looking for was a short. We wanted to go short, and you're going to see lots of levels here on both of these back-to-back levels. And the reason why these levels look a little bit differently than you would normally see on my channel is to basically show how tight or how deceptive these charts are. This is actually fairly wide risk on this trade. Execute here, risk off this level, but it's only that much. And this is one of the reasons why, and I've talked about this on my channel a lot, about snapping your crosshairs, getting familiarized with the risk or the range on the day, which equates to risk, before you execute these trades. And there's plenty of time to do that pre-market. It's something that I tell my members to do, my traders to do all the time. Every single morning, I tell them to snap their crosshairs and get familiarized with the charts, with the ranges, with your risk, with everything. And it's about preparation. Preparation is key to survival as a trader. So as it came up, it actually came into a start point that we could have started in. Now, this morning I was extremely clear that we want to actually touch that level in order to execute it. If it doesn't touch that level, touch it. It has to touch that level. We cannot execute it. And that's because of the wide and extended risk, because it was such a wide range day or a high range day. So it didn't do that, but it actually did come just like by the skin of its teeth, come into an acceptable level to execute, but we didn't take it. Sometimes there are lessons in not executing the trade, and that's something that's very hard for new traders that are all hot and horny to get involved with these trades to understand. Sometimes the bigger lesson is not executing the trade and working on that discipline and self-control. I was live trading today, and I'm working with a very small group. Plus, I'm managing the main room as well, working two different screen shares at the same time. So it's a lot for me to handle as well. So that's added risk for on my end. So we waited for it. We waited for the long. As we come down into this level here, this first of the back-to-back levels, executed the long, paid myself on the push up, right in here, because it came right into my start point by 1 or 2 cents. I was okay with starting in just barely coming into that. And that was right here into this range. And you can see it just ticked it. It literally ticked it. I believe it was like a penny or two over, which on a $440 stock or ETF is pretty narrow, man. So just started in, paid myself on the push up, right? Trading very tight, very in and out, very incrementally today. And that's what we're going to be talking about later. And then as it came into that lower level, executed again. You can see normally right here where my cursor is, that would be an area to add into that trade. No ads today. Not interested, was not interested at all. So executed, paid myself, executed, paid myself, very small size. Both of these positions were, I wanted to start in with a quarter size starter position. My full size starter position is generally 100 contracts on a clean, crisp type of day. And when I say a quarter size position, that isn't just an amount of contracts either. That's important to note the price of the premium. So normally on a normal day, if the premium is normal, anywhere between $1 and $2 per contract, somewhere in that area, I would have taken 25 contracts and as a starter position. And then I would just work the trade, increasing my position size as I see fit or as the opportunity comes up. Now, because that premium was so expensive, it was $6 at the time, which is 3-4x what it normally is. I'm not taking that. I'm going to take a much smaller position. So ended up working 2 separate 10 contract trades, which equates to be about that quarter size position. So not a huge day, locked in $883 on these 2 trades, but I'm extremely happy with that. Managed very well, showed restraints, showed self-control, discipline, all of those positive attributes that you need as a professional trader. So really nice day. Now let's talk about a few things that you guys can do when we have markets like this. Now, I'm talking from a professional standpoint, of course. Like if you're a gambler, none of this applies to you. If you just want to enter and make money and fucking just fill your boots, you're going to blow up, right? I'm not talking to those people. I'm talking to the people that actually want to do this professionally and they are striving and pushing towards that. Number one, you have to look at the price. If you are trading options, look at the price of the premium. If it is very high, which it normally is on big gap downs or big gap ups, because it has not taken time to acclimate to the actual price of the premium. Size down. You got to notice that first and foremost. Size down. It's not worth it. On days like this, it's even beneficial if you don't trade, and I'll explain why. It's not just because you don't want to take a trade. What a lot of traders dismiss and discount is sample size and pool size, okay? Strategy has everything to do with sample size and pool size, like how many times you've seen a certain something, okay? And then you can develop strategies based off of that. But what a lot of people do is they have a core strategy and they're not paying attention to different markets. So this is a very different market. This is a market that is selling very hard. Now, I've experienced this market plenty of times. And if you were trading, and a lot of you are new traders, so you weren't around last time that President Trump was in office. It's the same playbook here. It's the same thing. We have trade wars and tariffs that get announced and get released. The market panics and it gets scooped up later on. Now, I don't know if it's going to scoop up early or anything like that. That's not, it's irrelevant. It doesn't matter. As day traders, it doesn't matter. You're looking for short-term opportunity. If you want to see my whole idea for a long-term hold on the market, then go back and take a look for that video. It's in there. I give all the price points to buy, to where you can start buying and working that position. I even tell you how much of a percentage of a position to use in the whole nine. Go find it, go watch it. But getting back to sample size and pool size, when you see something happen and it happens once every 2 years, once every 3 years, well, for it to happen, if it's every 2 years, for it to happen even 4 times, it's 8 years. It's a long time, guys, right? You know what I mean? So let's talk a little more realistic. Let's say something happens once every 6 months, but there's a big opportunity around that, okay? So generally when there's emotion, there's huge opportunity. We all know this. But if you've only seen it once, you don't know how it's going to react. You're guessing at it, right? So when you have days like this that are different than the norm, this is why it's best to sit back and watch. Now, I've been a day trader professionally and consistently for the past 11 years. I've seen a lot. I haven't seen everything, but I've seen a lot, right? So I've compiled all of these different markets through the years, right? Macro, micro markets, doesn't matter. I've seen a lot. So I compile that and I make notes in my mind, and I have a notebook where I keep specific notes. That notebook is worth literally millions of dollars, because that's what it's made me in the markets. That's something that you can't put a price on, is experience. So when someone with experience is telling you, maybe you should hang back and really just watch today. Watch, see how it moves, see how it reacts at support and resistance levels. See the type of traps that they might try and pull. Do they dip it just below that support level, just far enough to stop you out, and then it comes roaring back up? What do? There's a bunch of things that you have to watch for on days like today to prepare you for the next opportunity that is exactly the same. And that's what I'm getting at. People forget that this is a game of miles. It's not a game of, inches. It's a long-term perspective. And people forget that, and they have a very short-term view or short-sighted view of what they're doing. And I've got a question for you guys that are actually watching this. Do you want to be a trader for a very short period of time and then lose it all? I mean, I'm pretty sure I know the answer to that question, right? I would hope so anyways. Of course you don't. You want to be a trader for your career, for years, and you want to be successful. That's why you guys are here. So in order to do that, things need to be done a certain way. I know when you look at social media and you see all these people claiming they're making all the money in the world, I went over this, that 10% that make it, not making it long term. That is to gain consistency, generalized consistency. It doesn't necessarily you make them a lot of money. That's just to get consistent. And then of that 10% that make it 5 years, that is 1%. And of that 1% at 5 years that can make it to 10 years is 0.1%. Those are the statistics, ladies and gentlemen. That's the percentage. Those are the odds. So again, like I said the other day, you're dealing with a 0.1%er that has made it over a decade. And the way I trade and the strategy that I have, I will do this for another 10, another 20. It doesn't matter. It doesn't matter what the market is doing, because I'm always looking at this as a profession. I am doing this professionally. I'm not a gambler. I'm not trying to get rich on any single trade. I do this for a living. And it's important to make that distinction. So just a little piece of advice. That's all. Whether you take it or not, that's up to you. But I'll still be here and you might not. And that would be a damn shame because you're already putting so much into this. I'm sure you all are, right? That's why you're here. So listen to the guy that that's on the microphone right now, man, right? There is a certain way that you have to do this. You know, it's interesting before I wrap this up, and I know this one's a little long-winded, but I got a little bit of time here this evening. I'm going to be doing a video. Now, I've talked about this a lot in my service where I can look at anybody's singular trade entries, just a trade entries chart, just like this right here. And I can tell you whether or not they are, number one, legitimate, number two, actually have consistency. I can look immediately. Now, don't get me wrong. Everybody has those trades where they don't work out the greatest. I get it. And it has nothing to do whether it was a green trade or a red trade. So scrolling through Instagram, I came across a guy that I actually like. I personally like. I've talked to this guy lots. I haven't really seen anything from him in a long time, in years, because I just don't fucking pay attention to other traders, man. I don't care. But it popped up and he posted an entry chart, and I'm going to dissect it. I'm going to leave his name out of it because it's not about putting him on blast. But what I want to warn people against, because he does run a service, and looking at that, and I shared it with a few members that I talk with quite often, and they're not just members, they're friends. And immediately they said the same thing I did, even before I had to say it. They knew what was wrong with that chart. You know, shorting breakdowns, not thinking about risk at all. You can't tell me that that person is consistent or successful. It's impossible. See, that's a thing that it's very easy to pull the wool over people's eyes that don't have experience in this because everything looks the same at first glances. I understand that. But when someone is just like shouting from the rooftop to stay away from those motherfuckers, man, you gotta listen. And it has nothing to do with personal gain. It's got nothing to do with competition. I do not have any competition, guys. I've made it to a level in life that, man, people dream of. I'm there. I'm already there. It's not about kicking someone down so then I get more subscribers. Like, I don't give a shit about that. I don't care. I'm here to work with traders that actually want to do this. That's all. But I am going to be dissecting that chart, and I think you guys will learn a lot from it. And again, it's going to be coming from a place of education, not coming from a place of hating or tearing someone down. His name's not going to be mentioned. It's just going to be, guys, listen, you cannot trade like this. It will not work consistently over time. It won't. It won't. It can't. It's impossible. And it has nothing to do with difference of strategies or anything like that. It has to do with odds. That's what it has to do with. So if you want to learn how to do this professionally, come to tricktrades.com. If you don't, and you want to continue on with my free stuff, it'll just take you longer. That's all. That's on you. It's all good. No worries. That's why this stuff's here. Enjoy it, but you do have to, if this is your second time viewing this channel, you do have to subscribe and you do have to like the videos because it does help, and it's only fair. Don't be just a taker, guys. The world is full of those fucking people. Don't be one of those guys. I know you're better than that. So I hope you all have a wonderful weekend, and I'll see you Monday. Adios, folks.